Hey everyone, welcome back to Corporate Decoder, the place where we unravel the secrets hidden in plain sight within corporate filings. Today, we're diving into the latest report from the Federal Home Loan Bank of New York, and let's just say there's a little something about their recent financial picture that might surprise you, especially as we head into the second half of the year. This document essentially tells us what's been happening at the Federal Home Loan Bank of New York, or FHLBNY as they're often called. It's a regular check-in, like a financial checkup that publicly traded companies have to do to keep everyone informed. The main news here comes out on July 23rd, which gives us a snapshot of how they were doing up to that point. Remember, FHLBNY isn't your typical bank. They're a federally chartered corporation established to support housing finance. Think of them as a bank for banks, providing funding and liquidity to member institutions. Now, while they give us their phone number, we're not going to be calling them. We're here to dig into the numbers and the story they tell. It seems like FHLBNY doesn't have specific classes of securities trading on major exchanges that they're highlighting here. This might mean their structure is a bit different, or their public-facing securities are managed differently. This is where things get interesting. This section is all about how the company is performing financially. It's like opening up the hood of a car to see how the engine is running. So on July 23rd, in line with this filing, FHLBNY put out a press release. These are usually designed to provide the most important highlights, and it specifically talks about their unaudited financial results for the quarter that ended on June 30th, 2025. This press release is attached as Exhibit 99.1. Think of exhibits as the backup evidence for the main report. This is where you'd find the juicy details if the main body is too high level. And this last bit, Exhibit 104, refers to an interactive data file. This is a modern way of presenting financial information that makes it easier for computers, and thus for us analysts, to read and analyze the numbers quickly. It's essentially making the data more accessible. And finally, the signature. Kevin M. Nayland, signing off as the Senior Vice President and Chief Financial Officer, confirms that this report is accurate and that FHLBNY is indeed releasing this information on July 23rd, 2025. Now, let's talk about what this filing is really telling us. FHLBNY, as a financial institution, is deeply tied to the health of the housing market and the broader economy. When they release their quarterly results, it's an important signal. While this particular filing doesn't contain detailed financial tables directly within the main text we see here, it points us to a press release which would contain those crucial numbers. We need to imagine that press release contains the actual financial performance for the quarter ending June 30th, 225. Typically, when we look at a financial institution like FHLBNY, we're interested in things like their net interest income, which is the money they make from lending minus the interest they pay on borrowing. We'd also look at their provision for credit losses, which is like setting aside money to cover potential bad loans. Their capital ratios are also super important. These show how well they can absorb losses. A strong capital ratio means they're on a solid footing. For FHLBNY, their business model revolves around providing liquidity to their member institutions. This means they're a significant player in the mortgage markets. If they're doing well, it suggests that their members, other banks and mortgage lenders are also likely doing reasonably well, or at least have access to the funding they need. Conversely, if FHLBNY were to show signs of stress, it could ripple through the housing finance sector. The timing of this report, July 23rd, means it's covering the second quarter of 2025. We're interested in trends. Are their assets growing? Are their liabilities managed effectively? Are they expanding their loan portfolio, and at what risk? For a bank like FHLBNY, a key metric is often their net interest margin, the difference between the interest income generated by their loans and the interest paid out on their deposits and borrowings. A widening margin is good. A shrinking one can be a warning sign. We also need to consider the external environment for the second quarter of 2025. What were interest rates doing? Was the housing market robust or showing signs of cooling? These macroeconomic factors heavily influence a bank's performance. If rates were climbing, FHLBNY might be earning more on its new loans, but it could also mean their existing borrowings are becoming more expensive. The fact that this filing points to an unaudited press release is important. Unaudited means the numbers haven't gone through the full rigorous review of an external auditor yet. While generally reliable, there's always a slight possibility of minor adjustments once the official audit is complete. In the world of finance, every basis point and every dollar can matter, so we always keep that in mind. Looking at the structure of the filing itself, it's quite standard for an 8K, which is a report of current events. The company is announcing an event, the release of their quarterly financial results. They're not changing their fundamental business or their leadership in a major way here, simply updating the market on their performance. The lack of specific securities registered on exchanges like Nasdaq or the UNSE is noteworthy. This might suggest FHLBNY operates as a wholesale funding institution with a specific mandate rather than a retail bank with publicly traded common stock. Their investors or stakeholders might be the member institutions themselves, or perhaps they issue other forms of debt or preferred stock, not detailed here. The essence of this filing then is to direct us to the actual financial disclosure document, the press release. That press release is the true source of the numbers that tell the story of FHLBNY's performance. Without those specific figures about revenue, expenses, profits, and asset quality, this 8K is more of an announcement that results are available. A key takeaway here is the importance of checking attached exhibits. It's like being told there's treasure buried somewhere, and the exhibit is the treasure map. We'd be looking for growth in their loan portfolio, stability in their funding sources, and healthy profitability ratios in that press release. For an institution supporting housing finance, metrics like mortgage origination volume, delinquency rates on their loans, and the overall health of their balance sheet are paramount. If the press release indicated, for example, a significant increase in loan provisions, it could signal growing economic uncertainty or specific stress within their borrowing base. Conversely, strong net interest income growth would suggest effective management of interest rate risk and a healthy demand for their services. In closing, this 8K filing from FHLBNY for July 2025 serves as a notification of their latest financial performance update, directing us to the detailed, unaudited results. While the filing itself is brief, it underscores the importance of these periodic disclosures for understanding the financial health and operational status of significant entities within the financial system, especially those that underpin critical sectors like housing. What's your perspective on the importance of these FHLBNY updates for the broader economy? Let me know your thoughts in the comments below. If you found this breakdown helpful, please give it a like and subscribe for more in-depth looks at corporate filings. Also, don't forget to join our Discord community. The link is in the description for even more discussions. Thanks for watching, and I'll see you in the next video.